Good morning, it's Tuesday the 21st. I'm FX Plu and this is the market brief. So Sajid Javid announced that the UK intends to go its own way over trading rules and regulations after Brexit. His comment reignites the hard Brexit concerns, where the big fear is how rules and regulations governing trade and overly complicated document requirements could really slow the flow of goods. Naturally, any of that could only kick in following the 2020 transitionary period, but it does mean that they've only got until December the 31st to find a better solution. The market naturally picked up on this and sold sterling down to 129.60, but the pound did manage to fight back towards the end of the day to finish at about 130.10. On the calendar this week we do have all the PMI data due out. The money markets have settled on about 65% chance of a rate cut. So with the market fairly sure of a rate cut next week, any reaction to poor PMI data should be pretty limited. Do keep an eye out though, because if the December number shows any election elation or a Boris bounce, shall we say, we could see sterling jump a little higher, but any such move would be likely to be short term and unlikely to persuade the MPC that the economy could rally from here. Over in the US, the dollar did rally yesterday in the light trading conditions of Martin Luther King Day. Analysts have started to look at the relative strength between the US and China economies, and where China released its lowest growth data for about 30 years, it was an excuse for the bulls to plough into the dollar. Trump's impeachment trial starts today, and while the row over the partisan voting continues, the market remains reasonably confident that dear old Donald will be found not guilty. And as always, not much to report from the Eurozone. Things continue to bump along the bottom over there, but there are rumours that Christine Lagarde will announce the first strategic review of the ECB. That'll be the first review in about 20 years. So it could be a strong step forwards for the bank, but could just as easily be aimed at taking some of the pressure off the ECB's lack of policy alternatives. We'll have to see how that one plays out. For now though, the euro dollar remained largely unchanged, trading around the 110 mark. Right, I'm off to warm up. I'll see you tomorrow.